Hey everyone, welcome back to the channel. Today we're diving into the world of insurance contracts. I know, it sounds a bit dry, but understanding these terms is super important if you're buying or managing insurance. I'm going to break down 36 key insurance contract terms in a way that's easy to understand and remember. Let's get started. 1. Adhesion. This is a contract where one party, the insurance company, writes all the terms, and the other party, you, just has to accept it as is. No negotiations here. It's a take it or leave it deal. 2. Agent. This is the person who sells you the insurance policy. They represent the insurance company but also have a duty to look out for your best interests. 3. Aleatory. Insurance contracts are aleatory, meaning the exchange of value isn't equal. You might pay premiums for years and never file a claim, or file a claim after just one payment. 4. Ambiguities. If something in the contract isn't clear, courts usually side with the policyholder. That's why insurance companies need to make their contracts crystal clear. 5. Apparent authority. This is when an agent seems to have authority to do something, like bind coverage, because of how the insurance company presents them, even if they don't officially have that power. 6. Broker. A broker is like an independent agent. They work for you, not the insurance company, and help you find the best policy, but they can't officially bind coverage. 7. Competent party. To enter into a contract, you need to be of legal age, mentally capable, and not under the influence. Basically, you need to know what you're signing. 8. Concealment. If you hide important information when applying for insurance, that's concealment. It can void your policy, so always be honest. 9. Conditional. Insurance contracts are conditional, meaning the insurer only pays if certain conditions are met, like a covered event happening. 10. Consideration. This is what each party gives in the contract. You pay premiums, and the insurer promises to cover your losses. 11. Consideration clause. This part of the contract spells out how much you'll pay in premiums and when they're due. 12. Doctrine of reasonable expectations. If a policyholder reasonably expects coverage based on the contract wording, courts may enforce it, even if the insurer didn't intend it. 13. Estoppel. If an insurance company says or does something that makes you act a certain way, they can't later deny responsibility for it. 14. Express authority. This is the official power an agent has as written in their contract with the insurance company. 15. Fiduciary. Agents and brokers are fiduciaries, meaning they're trusted to handle your money and give you honest advice. 16. Fraud. Fraud is lying to get insurance benefits. It's illegal and can lead to serious consequences. 17. Implied authority. This is the unofficial power an agent has to do things that are part of their job, even if it's not explicitly stated. 18. Indemnity contract. Most insurance contracts are indemnity contracts, meaning they aim to put you back in the same financial position you were in before the loss. 19. Insurable interest. You need to have something to lose, like your home or car, to buy insurance. That's called insurable interest. 20. Insurance policy. This is the written contract where the insurer promises to cover your losses in exchange for premiums. 21. Legal purpose. An insurance contract must be legal and not against public policy. No shady deals allowed. 22. Material misrepresentation. If you lie about something important on your application, that's material misrepresentation, and it can void your policy. 23. Misrepresentation. This is any false statement on your application, whether intentional or not. 24. Parole evidence rule. Once a contract is written, verbal agreements don't count. Everything must be in writing. 25. Policy rider or endorsement. This is an add-on to your policy that changes the terms, like adding extra coverage or changing deductibles. 26. Reasonable expectations. If a reasonable person would expect coverage based on the policy wording, courts may enforce it. 27. Representations. These are statements you make on your application that you believe to be true. 28. Rule regarding ambiguities. If there's a dispute and the contract wording is unclear, courts will side with the policyholder. 29. Subrogation. This is the insurer's right to go after a third party who caused your loss, so they can recover what they paid you. 30. Unilateral. Insurance contracts are unilateral, meaning only the insurer makes a legally enforceable promise to pay claims. Your only duty is to pay premiums.
31. Utmost good faith. Both you and the insurer must be completely honest with each other. No hiding important details.
32. Valued contract. Some contracts, like life insurance, pay a set amount no matter the actual loss. These are valued contracts.
33. Void contract. A contract that's invalid from the start, usually because it's missing something essential, like honest information.
34. Voidable contract. A contract that can be canceled by one party, usually because of a mistake or misrepresentation. 35. Waiver. This is when you voluntarily give up a right, like choosing not to pursue a claim.
36. Warranty. A warranty is a statement you guarantee is true. If it's not, the insurer can cancel your policy. And there you have it. 36 insurance contract terms explained in plain English.
I hope this video helped clear up some of the confusion around insurance contracts. If it did, give it a thumbs up, share it with someone who might need it, and don't forget to subscribe for more easy-to-understand financial tips. Thanks for watching, and I'll see you in the next video.